everyone to this webinar on how to create a pitch deck, everything related to pitch deck, valuation, business plan, and financial modeling. The speaker today is Mr. Aayush Sachdeva. He's a young entrepreneur. He was ranked 22nd in All India College of Business Studies. He's the main promoter of Pitchkrafts. Pitchkrafts is into creating documentation for a successful fundraise. And amongst the many things which Pitchcraft does is it makes you investment ready. And, over the years, it has done remarkable work. And it is a one-stop solution for complete fundraising documentation. And this a 15-member team with Aayush. They have done more than 200 projects across 30 industries. And so I hand it over to Aayush to introduce himself and then take it forward from here. Thank you so much for joining.
Thank you, Tushar sir. So first of all, good evening to everyone who all are here and who are looking forward to learn how we can make a very good pitch deck for investors. So myself, I'm coming from background of management and finance, as Tushar sir mentioned, and I have a profound interest and knowledge of creating pitch decks, financial models, business plans, and your valuations, especially, right? So as mentioned, in the past few years, we have done more than 250 projects and have worked with more than 250 founders, okay, and have made them investment ready. Some of them also got funding, okay, and some of them are also looking to get them funded. Now, in this session, we would be addressing some questions like how we can make an investment ready pitch deck, okay, what is the structure of the pitch deck, what are the don'ts of a pitch deck, okay. And finally, I would also be showing you some of the samples of great pitch decks. Okay, so let me just share my screen, okay. Let me know if it's visible. Tushar sir, is it visible, my screen?
Yeah, I can see it very clearly.
Okay, great. So I will just give you a small first intro pitch about my company. So Pitchcraft, as mentioned, is a one-stop solution for all the fundraising documentation. If you're looking to get your fundraising documentation, you can definitely reach out. Second, we stand for complete fundraising. Okay, it comes from we start from the pitch deck, which is the first step. Okay, then we start with the financial models. Then we also make valuations, and we do business planning. We have a team size of 15 plus, completed more than 200 projects into 30 plus industries and 5 stages, starting from idea stages, then to revenue stage, also Series A and Series B. Some of the documents like valuation, like convincing values and strategic planning process, we follow it. Then these are some of the pillars of creation. Companies we have worked with, okay, such as Kalari Capital, Adloyd, Floix, Nomi Paris. The 4-step process that we follow, we write, we model, we design, and we deliver. Some of the client testimonials. Okay, starting up this session, how to make a pitch deck, and before starting, we need to understand what is a pitch deck and why it is important. Okay, every founder here, okay, is looking for investment and want to raise investment to obviously expand and grow. Okay, so communicating to investors is difficult. Okay, so you need to understand you cannot call an investor and say what you are doing. Okay, you need some documents, you need a pitch deck for it. Okay, you need a presentation that tells what your idea is, what you are doing, okay, how you are doing, how you are different, communicating well through a presentation. Okay, because investors, trust me, won't be giving you a time. They would be just giving you 5 to 10 minutes seeing your pitch deck. Okay, an average investor gives you 4 to 5 minutes, not more than that. So your pitch deck should be very crisp, okay, easy to understand and small, okay, at the same time very presentable, graphically very appealing. Why? Because see, everyone wants to see a good thing, right? At the end, no one wants to see a boring presentation. So what a pitch deck is, first document that is going to investors. So if your pitch is not right, investor is not getting what you're doing, obviously he won't be calling you. Okay, he won't be writing you a mail. If he doesn't know like what your idea is, he's not able to understand. He's not able to understand how you're different from the competitors, what you're doing. Okay, he won't be giving you a call for investment. He won't be like discussing the idea with you. Okay, he won't be discussing the deal. Okay, talking about the VCs or talking about the Indian investors, pitch deck is very important for both of them. So as I mentioned, the importance is like if you need funding, you have to get a pitch deck which has a good storyline. Okay, good storyline is very important. Good message communication, both by content, also by visualization. Visualization is also very important. Okay, like graphics. If you're presenting market size, okay, it should look like okay you're talking about market size, not just placing content on the slide. Okay, so graphics at the same time the storyline and the content. Okay, if the pitch deck is conveying the right message to the investor, okay, it's a very good pitch deck. Okay, and that would get you funding. Now coming to what should be a structure of a pitch deck, as Tushar sir also mentioned yesterday. Like first we start with the cover slide. Okay. Second, the problem statement explaining what the problems are. Okay. I would also be sharing some tips how you can make a good problem statement and how you can make a good solution. Team behind, explaining the team. Okay. Who are your team members? Okay. Why they are important to build this startup. Okay. Market size and opportunity. Identify what's your market. Identify what's the size of the market. Okay. Now, why this is important? As mentioned yesterday also, bigger the market, high growth potential, more valuation. Okay. More funding, you can grow your business more. Okay. If you are if you are operating in a smaller market, the market size is small, you cannot grow yourself. Okay. So bigger the market, bigger the opportunity. Then the product, how your product is unique. Show him like what's your product. Show him the UX and UI. Okay. Business model, again the most important thing. What's your business model? What's your revenue model? How do you make money in your startup? There could be different streams of revenue. If you are selling a product, there could be different distribution channels. You can do B2B, you can do B2C. Then there is D2C also. Okay. You can cut the retailers. Okay. And you can cut the middleman and directly sell to the end consumers. Okay. What is your business model? How do you make money? Okay. This should be crystal clear to investors. Okay. If you are a confused entrepreneur and you don't know how to make money, okay, obviously any investor won't be investing in you. Okay. Traction. Okay. What have you achieved so far? Okay. It could be market research. Okay. It could be testimonials. Okay. More than it could be your best thing is sales. Okay. What are your sales? How many customers do you have? Okay. What's your traction so far? What's your let's say CAC? Okay. What's your cost to acquire a customer? Okay. What's their lifetime value? If they're staying with you, how much revenue can you produce from the customers? That's also very important metric for investors. What are your conversion rates? Okay. If you own a restaurant, how many orders are you getting daily? What's the average value of that order? Everything counts. Then your competitor analysis. Okay. Showing what are the competitors in the industry, how you are better than them, what they are doing and what you are doing. Okay. So your advantages, okay, are very important. Like because every investor wants to know that if he is like partnering and investing with you, right, how he would be different from other players in the industry. Okay. Then coming to financial projections. Financial projections you can present in terms of revenue. You can present it in terms of customers. You can present it in terms of locations. You can present it in terms of your EBITDA margins also. Okay. As we all know that startups take heavy losses in like first few years, right? So investor wants to know like in fourth, fifth, or third year, okay, will you be positive? Okay, so you can also show your EBITDA margins over the 5 years. Okay, the ask. Okay, another very important slide. How much amount we are looking to raise from investors? Okay, presented in USD and INR both. Okay, if you are sending it to a global fund. Okay, presented in USD. Okay, present the allocation of funds also. Okay, what are the distribution of funds? Because you want to show to investors like, yes, I have done my maths. Okay, I know I'm putting this much share into marketing, 30% into marketing, 20% into tech, 50% into operations. Okay, everything, show him the allocation. Then your future roadmap, okay. Once you get funding, okay, how does the future look like? What you want to do in future? What features you want to introduce? What's your expansion plan? Okay. Once you get funding, what you will do next? Okay. Tell him the next step. Okay. Tell him the roadmap, 6 to 8 months roadmap or 6 to 12 months roadmap. Okay. Tell him the bigger picture. In 12 months, I would be taking from 10,000 customers to 2 lakh customers. Okay. Okay, my user base would be increasing 10% per month. Okay, tell him that. What are your targets? Okay, targets you want to achieve. So this was a very brief introduction about what a pitch deck is. Okay, we would also be diving into like slide by slide and seeing like what are the important things like in every slide, what are the important things that we should follow. First, starting with the cover slide. Okay, first most important thing is your company name. Okay, also the company name, the registered name also, because it tells the investor like, okay, you're a private limited company, you're not a partnership firm or something. Okay, then second thing, company tagline, okay, and company logo. Always put your logo on the first slide. Okay, big and clear. But tagline should, they should be able to understand like tagline is very important, because in one line you're giving the complete introduction of your pitch deck. Okay, like what's your tagline is very important. Okay, this is again a complimentary slide. Company gave an overview of the company. Okay, like 3 to 5 sentences at maximum. Okay, you can also state your vision and mission in this slide. Okay, give him an idea like what's the company about. Okay, what industry you're in, what you are doing. Okay, brief company introduction. Okay, then starting with the problem statement. Okay, like first you as a founder need to identify, if you are into the market and bringing a product, what problems you are solving of the customers. Okay, it could be anything. Okay, like if you are a, let's say a restaurant owner. Okay, if you see like there's a problem for a type of customers. Okay, like what is this problem? Is this hygiene? Is this supply and demand? Okay, or is it delivery issues? Okay, like figure out a problem that a huge customer base faces. Okay, then try to solve it. Okay, and on the pitch deck, how you represent that problem is very important. Okay, first it should be easy to understand. Okay, your problem statement should not be complex. You can use like good words. Okay, but do not use complex words, like if you're not able to make it understand. Okay, then your problem statement is of no use. Okay, so use simple language. Okay, use pointers and don't be repetitive. Don't repeat only one problem twice. Okay, then comes to the solution. Again, like once you have identified what are my problems, then tell the investor what are the solutions of the problems. Okay, I like identified this problem. Okay, and this marketplace or something like this is the solution of this problem. Okay, so try to identify that. Again, be very keep it very short. Okay, keep it very professional. Okay, and keep it crisp. Okay, small pointers. Then explaining the team behind. Okay, okay, so three things are very important in this. First, your picture. Okay, it makes a personal connect. Okay, second thing, your credentials. Okay, credentials as in like first thing, what role you are handling in the company. Okay, then your past experiences. Okay, if you are in an industry and you have certain like years of experience, show them the experience, show them the companies you have worked with, show them like if there are like other startups that you are handling on, you have taken some exit, or you have like make the company like say 100 crores company or something. Okay, so show them your credentials, why they should invest in you. Show that your team is strong. Okay, your team is complementary. It shouldn't be like that, like we are two founders and both are finance, we don't have a marketing guy, we don't have a tech guy, we will outsource everything. Okay, be complementary. There should be a tech guy, there should be a marketing guy, there should be a finance guy. Your team should be complementary. Okay, there are situations when the team is not complementary. Okay, but that's a different scenario. Okay, but it is always preferred like the team is complementary. Okay, second thing, now next thing is market size and opportunity. Okay, show them the size of the market. Let's say if you are into the food tech industry, show them what are the sectors of the food that you're targeting, how big is the food tech industry, what is the CAGR of the market, If you're targeting any subsector of the market, what is the size of that subsector? Okay. Then the product slide, explain how does your product work. Okay. You can also include product videos, product pictures, okay, technology that you are using in the product, okay, and your explain different features of your product, okay. Then comes your business model, okay. How do you make money? Again, it could be a commission based model, okay. It could be a subscription, monthly subscription, yearly subscription, premium model, okay. State what you are following, okay. If you're following a commission model, state the percentage of commission, okay. It could be direct sales also. Then if you're doing sales, okay, you're selling a product, mention your channel of distribution. What is your channel of distribution? Figure it out, okay. Are you going to wholesale? Are you going to retail? Are you going online? Okay, is it omni channel? Okay, then figure it out. Okay, then coming to the traction part, okay. Tell investor what's your revenue growth, what's your customer growth. If you have if you are onboarding, if you're an e-commerce platform, okay, and you're onboarding sellers, okay, explain them like I have onboarded this much sellers, okay, this much products have been listed on the platform, okay. Then also explain the demand side of the story, okay. Demand side is what's your conversion rate, what's your daily visitor count, okay. After daily visitor count, how many products you are selling, okay. What's your churn rate, okay. Explain him everything, every other metric, okay. It is possible that you don't know every other metric, but you can surf on the internet, okay. What are the metrics to evaluate an e-commerce startup? You can get like suffice information. Then competitor analysis, okay. Show them who are your competitors. Do an analysis. There are various methods such as X and Y quadrant, okay. Make 4 quadrants, okay. Then place yourself different from the competitors, okay. This is one method. Then there is take and cross method. Make a list of features, mention your competitors, okay. Cross those features which they don't have and take those features which you have, okay. Then there are competitive advantages slide, okay. Explain your USP, okay. USP means unique selling proposition, okay. How do you sell your product, okay. Now, what's your value proposition? If customers are using your product, okay, or customers are using your platform, what value proposition do they see in your product, okay. Why an investor should invest in you, okay. So this slide is very important. It could be a game changer for you, okay. If you can tell investors why I'm important, okay, what's my advantage, okay, okay, that is what it makes like this slide very important. Then coming to financial projections, okay. Financial projections show the revenue growth, okay. Revenue growth, customer growth in terms of charts and everything. Use charts, okay. Don't just place number in tables, okay. Use charts and infographics. You can show EBITDA also, EBITDA projections also, okay. Users projections also. Then the ask slide, okay, present as told, present your amount in USD INR. What founders miss is like they don't mention the investment history, okay. Investment history as in, do you have debt on the company? If yes, mention it, okay. Do you have like a previous fundraisers? Okay, if yes, mention it. Do you have some, let's say, if you're bootstrapped? If you're bootstrapped also, then also mention it, okay. If you're putting in your own money, mention it. Like you're putting your own money, you're bootstrapped. You have invested 50 lakhs into the business. You have invested once you are into a business, mention it, okay. Then use of funds. What is the percentage allocation into different activities, okay. Like there could be marketing, there could be operation, there could be strategy, there could be legal, okay. There could be tech. Mention your, there could be miscellaneous also. It is possible that you are keeping 25% for miscellaneous, okay. Mention it that you are keeping 25% for miscellaneous. Use some graphs, use some pie chart to represent the data, okay. Then your future roadmap. On this slide, you need to tell the investor like, okay, I'm taking this fund. These are my financial projections. And on future roadmap, explain him how you would be expanding, how you would be hiring the team. If you're building a new software or new technology, okay, explain him in after 3 months, I would be building this new software. Okay. After 3 months, I would be launching this new feature. Okay. At the end of 12 months, I would be having this much customers, this much users. Okay. Explain it to him. Last slide is contact details. Okay, tell him what's your, if you have an office address, you can put your office address also. Then contact details. And also sometimes what they miss is like the person of contact. Okay, they don't put like who is the POC. Okay, So we'll definitely always put like who you're talking to. Okay, person of contact name. Okay, then the website link also, contact details, number and email. Okay, so that they can reach out to you if they want. Okay, so this was like complete structure of a pitch deck. Okay, starting from your problem statement, company overview. Okay, the solution, market size and opportunity, competitor analysis, advantages, financial position, ask, use of funds, future roadmap, contact details. We also saw what's the importance of a pitch deck and what is a pitch deck. Okay, and how you can make one and how you can make one that is like investor ready and what investors prefer. Okay. And Tushar sir, anything you want to add? Like what I have missed, anything?
No, you have covered all the points quite well. Um, so just if you could tell about that, what are the critical points when one is building the financial projections, both on the top line side and the operating profit side and the bottom line side, and
Okay.
which figures from balance sheet to keep in mind and which figures from profit and loss.
Okay, great. So now the slide we are looking into is like financial projections. Okay. So in financial projections, as stated earlier, there are two methods. Okay, if you're doing your forecasting. First, there is a top line. You can project your sales. Okay, then calculate your expenses. Okay. Second is you can project your expenses and then calculate the sales. Okay. Most preferred one is calculate your top line. Okay, calculate the top line. Once you have sales, then only you can project your budgets. Okay. Now if you are a year-old company or a year-two-old company, you know your sales, you know your customers. Okay, whenever you are putting money into marketing, you would be getting a return on it. Okay, so it's easy that you project your users first. Okay, then your operations and then other expenses. Okay, so first, always project your sales. Okay, make a revenue model, do revenue projections first. Okay, then do your expenses projections. Okay, it could be assumptions also, it could be targets also. If you want to achieve, let's say, like 5 million users, okay, put a target on it and then project your expenses for it. Okay, for 5 million users, what's your customer acquisition cost? Take it out from the industry or use historical data. Okay, to calculate your marketing expenses. Once you have those customers, okay, once you assume that, okay, in like third year I would be like doing 5 million customers. Okay, either by you can set this target by your own or by seeing the market, how many users are there and how many you can capture, how many like competitors are doing. Okay, how many share you can capture out of the market. Okay, once you have it, okay, then project your other expenses such as your operating expenses. If you are getting 5 million users on your tech platform, okay, then you're projecting, okay, I would be out of this 5 million, there would be like 5% would be active monthly. Okay, if 5% are active monthly, you would be having a tech expense. Okay, there would be server costs, there would be maintenance also. So ask your tech team, okay, or any other vendor, how many people do I require in the tech team? Okay, because I want to handle like, let's say, 5% of 5 million. Okay, then this would be giving you tech expenses. Okay, then your marketing expenses would be coming from CAC. Okay, then you need an operation teams to manage everything. Okay, so this is how you can project your expenses for the future. Okay, by projecting your top line. Okay, now heads, as Tushar sir, as heads of PNL and balance sheet. Heads of PNL, first your revenues. Okay, second your direct expenses. Direct expenses means directly which is related to your revenue. If you're selling a product, your direct expenses would be packaging and cost of products. Okay, then coming to indirect expenses such as marketing. Okay, employee cost. Okay, all these are parts of indirect expenses. Another head which is very important. Then your EBITDA margins. Okay, what is your EBITDA margins, what is your profit before tax, and what is the profit after tax. Okay, everything investor wants to know. Okay, then coming to the balance sheet. Balance sheet tells you what's the share capital you have invested, what's your reserves and surplus, are you making any assumption, or are you like taking out profits, or you're giving profits back to the company. Okay, that is also very important. What is your cash, what is your cash holdings at the end of the year. Okay, That also is taken out from the balance sheet, which is linked to the cash flow statement. Okay, so this is a complete financial model which shows like how much profit you will make, how much share capital would grow, how much reserves and surplus would grow, and how much cash flows you would be having at the end of every year for the 5 years. Okay, so this is how the complete financial model would be working. Okay, yeah. I hope it I hope I covered everything related to like most of the things. And any point, Tushar, sir, you want to add?
So, how do you avoid the main problem? Like what people do is they make the revenue like a Nike stick. You know, it grows exponentially, and they make the costs grow 20%, 30%. So how do you, see that kind of phenomena gives you very big cash flows, and
Hmm.
hence the valuation goes up.
Hmm.
But how do you make it realistic and industry oriented?
See how first always study your peers, okay? Like what valuations they are getting, okay? And because if you are, let's say, asking a very high valuation at a very early stage, no investors would be favoring that, okay? If it's a very early stage, 1 year old company, 2 year old company, and you are asking very high valuations, okay, and out of the industry standards, okay, or the current deals are also not like that, okay, then obviously no investor won't be giving you that, right? Then you have to also see what investor wants, okay. He wants to see a good growth also, okay, 10x growth, 20x growth, 30x growth, okay, but at the same time he wants to pay less, okay, in terms of he wants to take a good amount of equity, okay, but also he don't want to leave you with so less equity that you cannot raise your further rounds, okay.
Okay.
So there are like both sides of the story. Like he wants a good chunk also because he also wants to stay in the game, right? But at the same time he also don't want you to lose so much equity that you don't have interest in the business, okay. And the like more like the next rounds are not possible, okay. So now coming to the fact, like how do we avoid the, like what we say, like very steep slope, okay, of the financial revenues, okay, your financial projections. How do you avoid it? First, be realistic, okay. Don't predict any, like don't make an assumption or don't predict very high numbers on your startups, okay. Very high, such as I will give you an example. Let's say you own a company and you are doing 1 crore, okay, of revenue. Yes, you can achieve 2 crores, 5 crores, 6 crores next year, okay. But if you say I'm going to achieve, you're not a tech product, okay, you need time for expansion. If you're saying by money raising, like let's say 1 million, I would be achieving 50 crores, okay, then no investor would be putting it. Why? Because he has also seen the market, okay. If you take an example of Mama Earth, okay, you see what's the growth looks like, okay. See if they are doing 100 crores in what time period, okay. What is the growth rate of the other competitors in the industry, okay. What is the growth rate of the industry, okay. If the biggest of the biggest is not able to achieve it, okay, how can you achieve it in the second year? Okay, that's how we make the financial projection and financial model. If the biggest of the biggest is not able to achieve that growth, how can you do your startup 50x in first year? Okay,
Okay.
so competitor analysis is very important. See what's the industry growth rate, okay, and what is the biggest or the market leaders are doing, okay. Because obviously you cannot beat them in the first year itself. You can beat them in after 5 years or 6 years, right? You can achieve the scale in next 5 years, okay. But yes, first year, second years couldn't be very like shouldn't be very high, okay. Be realistic, okay, because if you're showing very high figures to the investors, they won't be entertaining you. Okay, so
Okay.
that's how you can do it.
Okay. And there is one more question here on the Q&A session. What is a financial plan? What is in it? Is it the same as a pitch deck?
No, no, no. Okay. Uh, let's do one thing, Tushar sir. I will like share my screen, okay, and let's share some like real samples.
Okay. Show us some real samples.
Okay. So let's I will just show one pitch deck, okay, and then I will also show a financial plan. What is a financial plan? Okay, how it is different. Okay, this is a pitch deck relating to, let's say, like you must have heard of Misho, you must have heard of Dukan. Okay, so there's another startup Sellingly who is also doing same. Okay, first we always start with the problem statement, very crisp and clear problem statement. High cost of online business. Okay, if you want to take your business online, you would have to make a website. Okay, then you do marketing expenses and everything. Okay, struggle of last mile deliveries, very important problem for all e-commerce. Okay, struggle of last mile deliveries. And if you're a shopkeeper and you don't know like what is going in today's world, because last mile deliveries, are many startups that are solving this problem. Okay, delivery is there, many other startups are there, and if you don't know about the startup ecosystem, you cannot use their services. Okay, that's why there should be a interconnect between. Okay, so these are the two problems that this startup was solving. Then we come to the solution statement. Okay, then the team behind, then the market size, what is the Indian e-commerce market size, what is the global market size. Okay, what the retail market looks like. Okay, product snapshots, how it works, stepwise presentation. Okay, then what are the digital tools and products that you're offering to the customers. Okay, if you're offering different features, okay, state that. Okay, then how do you make money? Is it subscription? Okay, they are making money through subscription, so state the subscription. If there is any premium subscription, stated in the deck. Competitive landscape. Okay, dot pay, bikai, dukan, how you are better than them. Okay, your projections in terms of revenues, then your ask and your fund allocation. Okay, then your acquisition target. So this presentation is known as a pitch deck. Okay, financials are only 2 slides of it, which is your projections and which is your fund allocation and ask. But when we talk about your projections, okay, what your projections now.
Yeah. Open bountiful foods.
This is started in manufacturing. Okay, so what are projections? Okay, like the 5 years projections. Okay, so Tushar sir is familiar with this startup. Okay,
Yeah.
not a startup, a company. Okay,
Yeah.
so one of the projects we worked, and this is 5-year projection first. Okay, so in an Excel sheet, you would be getting 5-year projections. Okay, profit and loss, direct expenses, gross profit, indirect expenses, EBITDA. Okay, then you would also be getting balance sheet. Okay, you need this balance sheet to show to investors. Okay, then cash flow statement. Okay, like next 5 years cash flow statement, then your valuations also, then your assumptions also, then your revenue model for the next 5 years. You can make it monthly, you can make it quarterly, you can make it semi-annually. Okay, anything. Then your expenses projections. If you're a manufacturing company, you would be having cost of raw material, operating expenses, packaging, cost of raw materials. Okay, like distribution. Okay, payroll expenses, managerial cost, technical, supervisory, operator and engineer, marketing. Okay, security and housekeeping. Okay, then your capital expenditure. Okay, if you're a manufacturing company, definitely you would be having capital expenditure. Okay, so this is a complete financial model. Okay, now different financial models have different things. Okay, and different heads also. Let's say if you are seeing something related to trading. Okay, then this would be the profit and loss statement. Okay, for a trading company. Then again the balance sheet. Okay, see, the structure remains the same. Okay, but what changes is actually your revenue model and expenses, because your revenue streams changes. Okay, like the revenue model they have, like they're selling stock screeners. Okay, some trading products. Okay, B2C revenue, B2B revenue. Okay, some AI products. Okay, so your revenue streams actually changes. Okay, then your payroll changes. Okay, your expenses changes when your industry changes. Okay, other things remain the same, the structure remains the same, how you link the sheets remain the same, but yes, your revenues and your expenses would be changing, which is actually a crucial part of your financial model. So financial plan, or we say financial model, is different, we saw in sample, and pitch deck is different. Okay, first document would be going, you can send both the documents together. First you can send your pitch deck and then you can send your valuation and financial model to investor once they ask it. Okay.
One more thing, Aayush. I saw video pitch decks, 3 to 5 minutes long. But they were more like product oriented and not business plan oriented. So what do you suggest? Some investors were telling me that that nothing beats up a regular pitch deck, not a video pitch deck.
See, first I would see video pitch deck. What most of the companies are doing while making a video pitch deck, they just take the slides and they just play a slideshow video. Okay, so it's the same thing. Okay, but let's say if I want some time to read the pitch deck. Okay, there's lots of data on it. Do you think like I can read a slide in, let's say, 10 seconds? I can read this complete slide in 10 seconds? No, right? I cannot read this. Okay, but if I'm interested, I would definitely give a pitch deck 20 minutes also if the idea is good. Okay, I hope you also agree on that point, right? If you like the company, you like the plan, you would definitely give 20 minutes also, right? If I'm sending you a pitch deck of Oyo, okay, you would be giving half an hour also reading that. Okay, so first, what the content is really matter. If you don't like something, you won't be giving 2 minutes also. Like you'll be saying, "ये तो सब कर रहे हैं, why I should give a time," right? Every other company is doing the same. Okay, as an investor, you won't give time. So video pitch decks are good, but actually, what I feel, you miss out some things on videos. Okay, graphic elements and everything is good, but the placement of text and the time you need to read that text is like you cannot read everything on a video pitch deck. Then when you're sending videos, it has 40 MBs and 50 MBs. You will you have to wait also while downloading it. A PDF is just like 5 MBs or 4 MBs. You can just download it very quickly. Very small points, but make a difference when someone is busy. Okay, very, very small point. Okay, but makes a difference. Okay, like the readability matters. Okay, at the same time, your convenience also matters, because like startups are built on convenience. Okay, someone like making something easy and convenient, they get funding, right? So why you are making like life of investors difficult by sending them a video of 50, 60 MB? Send them a page deck of 4, 5 MB. Okay, they will just read 12, 13 slides and it would be done. Right. So this could be one thing that we can, like, if you can make a short teaser or something. Okay, like send like a teaser of a product attached with the pitch deck. Okay, that is the best thing. Okay, if you can like just upload a link into a pitch deck. If you want to see a teaser of the product, just tap that link and you would be directed to a new window. Okay, that would be much better. Okay, if someone wants to see, they will see. If they don't want to see, they will like just see other things on the pitch deck. Okay, that could be done, I think so.
Okay, very well answered, Aayush. Thank you so much. I don't think I have further questions. Brijesh, if you have some, you can ask. Over to you.
Actually, I also don't have any questions. Yeah, one person is asking about the recording and all. You can answer.
Recording, yeah. So ISERD will put the recording on YouTube. Brajesh, by what time should it be out?
Yeah, it will be on 5th. Yeah.
5th. Okay, yeah. So it will be out on YouTube, and you can search my name or Aayush's name, or you can search ISERD. So you will get the video. Otherwise, you can send a mail to my email ID tk@consultancy.com, and I will send you the link of the recording.
Great.
Okay, Aayush, you want to give some closing thoughts and then we move on?
I guess, yeah, if there are any founders who are looking to make their pitch decks, okay, they can definitely reach out to me or Tushar sir. We will definitely help you. If you are also looking to raise funds, okay, Tushar sir is always there to help new founders and budding entrepreneurs. Okay, and I think after this, you can close, sir. You can close the session.
Okay. So anyone wanting to make financial projections, financial model, business plan, valuation, pitch deck, please approach Aayush Sachdeva at pitchkrafts.com, and also available on LinkedIn. You can search his name, and it's amongst the most prominent LinkedIn handles. And I have seen Aayush since more than a year now, and his delivery times and quality is awesome. And so, I would call all the budding entrepreneurs to reach out to Aayush and see for yourself the brilliant quality. And as for me, thank you so much again for coming. We had a good session yesterday, and again a wonderful session today. And I am available on LinkedIn by my name, Tushar Kansal, and also my website, consultancy.com with a K, and also on email, tk@consultancy.com. And thank you, ISERD, and thank you, British, for hosting it so nicely. And we look forward to doing more sessions with you. And thank you everyone who took out their valuable time and came for the session.
Thank you, Tushar sir and Aayush.
Thank you, Brijesh. Thank you, Aayush. Have a good day.
Thank you. Bye. Have a good day.